So we're just going to give a brief moment, about a minute or two, to let other people join the session. So whilst we are waiting, I will give a brief background of the webinar series. So for those of us joining us for the first time, what is Leading Conversations with FBNQuest? Leading Conversations with FBNQuest is a webinar series created to bring you market, industry, and consumer insights and analysis that are crucial for individual and corporate success. The series features the leading professionals of FBNQuest, as well as other industry experts with experience in corporate and private investment management, wealth preservation, financial advisory, and other areas of interest. We hope to open your mind to a world of opportunities through this session, and we are very much looking forward to engaging with you in today's session. Like I said again, we have a couple of panelists and guests on this session today. The session is going to run for 1 hour. The first speaker we have is Mr. Ayuli Jemide. He's the founder and lead partner at Detail Commercial Solicitors. We also have Mr. Jude Chiemeka, who is the divisional head, capital markets and Nigerian at the Nigerian Exchange Limited, which is the former Nigerian Stock Exchange. Here with me is also Ifeoluwa Dixon, who's the head fixed income. And lastly, we have Kasie Uwaifo, who heads the institutional sales team of the FBNQuest Asset Management. Again, we're going to be taking questions after this session. So the chat room is open and we can leave our questions in the chat room whilst we're having the discussion with our speakers today. We will take questions at the end of the session. Also, we're going to have poll sessions in between the discussions. And please, I would encourage everyone to participate in the poll, as it will help us get better understanding of you, or let us know more about yourself. So I'll go into the first activity, which is introducing my guest speakers. On the first list here is Mr. Ayuli Jemide. Sorry, we have a slight interruption. Okay, so again, first on the list is Mr. Ayuli Jemide. Mr. Ayuli Jemide is the founder and lead partner at Detail Commercial Solicitors, which is Nigeria's first commercial solicitor firm to specialize exclusively in non-courtroom practice. Chambers Global Guide 2015 refers to Ayuli as a very effective negotiator, possessing a vibrant and creative mind. International Financial Law Review reports that client says his expertise is remarkable. Ayuli, as an astute advisor, has worked with clients to close several notable transactions. He was named Best Lawyer Nigerian 2013 by World Finance. Mr. Ayuli is currently an adjunct professor of the IE Business School in Madrid, Spain. His active interest includes boats, kayaks, sun and sea photography, and swimming and tennis. Okay, sorry, we have some technical issues. I believe that my team are working to sort that out. There's some background noise in the background. Next speaker we have on is Mr. Jude Chiemeka. Mr. Jude Chiemeka is a divisional head, capital markets, Nigerian Exchange Limited. Mr. Chiemeka has over 28 years of experience, professional experience in securities trading and asset management across markets in Africa. He joined the Nigerian Stock Exchange as divisional head of trading business in February 2019, and he's now the divisional head of capital markets in the Nigerian Exchange Limited. But before joining the exchange, he had worked with United Capital Securities Limited, a subsidiary of United Capital Limited, PLC, as the MD CEO of United Capital Securities. He's championed the first cross-border trading under the West African Capital Market Integration Initiative and was also responsible for strategy, market penetration, product development, and client management. He also championed the issuance and listing of the first ever Eurobonds mutual fund worth about $10 million listed on the Nigerian Stock Exchange, and Wealth for Women Mutual Fund, the first gender-focused mutual fund listed on the Nigerian Stock Exchange. Mr. Chiemeka is a fellow and council member of the Chartered Institute of Stockbrokers, member of the Institute of Directors, and a fellow of the Association of Investment Advisors and Portfolio Managers. And he's also an associate of the Certified Pension Institute of Nigeria. We can give them an e-wave or a digital clap. Thirdly, I have Ifeoluwa Dixon. Ifeoluwa Dixon is one of our internal speakers, and she is a team lead of the fixed income solutions at FBNQuest Asset Management. She is a detailed investment professional with key competencies in portfolio management, financial statement analysis, and tracking, as well as forecasting macroeconomics and key market indicators. She is an active advocate for the growth and development of the asset management industry in her capacity as the Vice President of the Fund Managers Association of Nigeria between 2020 and 2022, and Chairperson of the Technical and Enlightenment Committee between 2018 and 2020. She pioneered the standardization of mutual funds benchmark and appropriate categorization of mutual funds. She is also in constant engagement with the regulator to enhance professionalism within the industry. Ife is a member of the Financial Inclusion Committee and Capital Markets Operators Committee at SEC. She's a certified treasury professional, certified Islamic finance executive, and advanced certified Islamic finance executive. She holds a master's degree in corporate finance and a doctoral of philosophy in investment finance, which is in view. Last but not the least is my internal speaker, another internal speaker, Kasie Uwaifo. She is a senior associate. Kasie works with the institutional sales team within FBNQuest Asset Management. She has extensive expertise in relationship management and engagement, and as well as business development for corporates and institutions. Prior to joining FBNQuest Asset Management in June of 2021, she worked in the institutional banking division of Guarantee Trust Bank, gathering experience in driving strategy, business growth, productivity, and profitability. She comes with very strong relationship management skills from managing key clients and staff in major corporates and institutions across various sectors, including the financial services and telecommunications. She holds a master's in art degree from the University of Kingston in Surrey, United Kingdom. Again, like I said, I have a lineup of very interesting speakers and experienced professionals. And even from their profile, you can already tell that this is going to be a very, very interesting session. Coincidentally, we have both females and both male as a panelist. So again, we promote gender equality, but honestly, this was just totally a coincidence. And lastly, myself, my humble self, Isabel Ashipa, who's currently the head H&I and Diaspora for FBNQuest Asset Management. She has about 10 years of experience in wealth management and investment management with a strong expertise in financial advisory, private banking. She basically helps she has expertise. Her core focus is in building and managing relationships with high net worth individuals and ultra high net worth individuals, and ensuring that these clients are able to meet their investment and financial goals. Having said this, we will move on to the next agenda we have today. Again, like I said, thank you for joining us. For those who have just joined us, thank you once again for joining us. The theme for today is exploring the relevance of diversification, especially in times like this. Again, like I said, we're going to have a Q&A session we're going to have a Q&A session after discussions, and we can leave our questions in the chat room. The chat room will be open, and we can leave our questions in the chat room. We will take questions after fireside discussions. Also, we're going to be taking a poll, And please, I would encourage everyone to take the just before we start. So we move right into the session, into the chat. And now we will be taking our first poll. So I'm going to have a question displayed on the screen. It says, how diversified is your portfolio? It's a single choice question, so just pick one. I think I'm very diversified. I'm investing in 4 different asset classes. I'm quite diversified. I'm investing in no more than 3. I play it safe. I'm only investing in 1 or 2. I'll count 1 to 5, and then the poll will be off. So in 1, 2, 3, 4, and 5. Wow. Okay. So there was an interesting engagement here. We have 45% of you who play it safe. They only invest in 1 or 2 asset class. We also have 33% of you who think you're quite diversified because you're investing in not more than 3 asset classes. And we have 22%, which is the least, who think that they are very diversified because they've invested in 4 or more asset classes. Anyways, whilst I take you through the chat and the discussion today, we'll find out who's well or more diversified and what other diversification options that can be, that you can adopt. So this will take me into the fireside chat today with my speakers. To all my speakers, good to have you today again. And so the topic says exploring the relevance of diversification, especially in times like this. And I guess on everybody's mind today is, what is really this diversification we're talking about, and how does it have any relevance to me, an investor, and me as a person? So I would like this question to go to all my panelists, and I would like to hear a perspective of everyone from this question. So it says, tell me what diversification is, and how does it relate, or what is the relevance to us as investors? So I would like Mr. Jude to take this first, and then I'll move on to the other panelists. Thank you, Mr. Jude. You have the floor now. And welcome, Mr. Ayuli.
All right. Good evening, distinguished ladies and gentlemen. First, let me start by thanking FBNQuest for inviting us to this session. Any session that helps to improve the knowledge of products in the market as to how investors will play is always welcome. From our perspective, just looking at the main theme of today's discussion, clearly diversification in itself as it relates to investors is just a way of hedging your risk. It's a strategy that you deploy to be able to manage your risk in a manner that will help you meet your investment objective in the long run. Obviously, it helps to smoothen out your returns. It also helps to ensure that all the various risk elements that are affecting markets, be it liquidity or political risk, all those risks affecting your investments are managed in a way that will allow you to meet your long-term objective. It's like the typical say, you don't want to put all your eggs in one basket. So that's really what diversification is trying to do for you, to ensure that you mitigate all the risk. Risk in itself, obviously, is an event of something going wrong. So you're investing and something could go wrong. So you need to manage it before it happens. Thank you.
Wow. Thank you for that viewpoint. I would let Mr. Ayuli give us his perspective to what is diversification and how does it relate, or does it have any relevance to us as investors?
Thanks. I think Jude has put it and captured it properly when he says, don't put all your eggs in one basket. That's what you typically hear when someone is advising you to diversify. But maybe if I just dig a little deeper, what they're actually saying is that, put your investments in as many asset classes as possible. And even when you are investing within an asset class, you can still diversify within that asset class. So let's say you're doing, U.S. sovereign bonds. People will say, well, take some investments that are short-term, do some long-term ones, don't invest in just one country, do Ghana, do Nigeria, and so all that, so that if anything goes wrong in Ghana, Nigeria will still pay, So those are the two major things I will throw in to illustrate what Jude has said.
Okay, thank you so much, Ayuli. I like the perspective that you also, gave to it, which is saying that even while you're within certain asset classes, you can also still diversify, sort of maybe country diversification, for example, or tenor diversification. So maybe you're doing shorter term investment, you're doing medium term, and you're doing longer term. So Kasie, I would like to hear from you. What's your perspective on diversification and how does it relate, or what is its relevance to us as investors?
Thank you, Isabel. Okay, so just to add to what the two previous speakers have said, when you talk about diversification and investments, you're really looking at the process of selecting the portfolio's investment assets. So how you select it in a manner that would reduce exposure to risk and also ensure that it's allocated in the right quantity. So if you're looking at investments, diversification as a principle is really important because that's what will help you reduce the concentration of your exposure to any single asset class and also ensure that your yields are well maximized across the portfolio. So if you delve deeper into this, then you're looking at the way you're selecting your asset classes. So Mr. Ayuli touched on that when he said you shouldn't be exposed to even one asset class. And even within various asset classes, you also have to consider the mix of instruments you choose to invest in. So that way you're well protected and you have a very robust quality and efficient portfolio that can withstand shocks that could happen within an asset class. Thank you.
Thank you so much, Kasie. Nice viewpoint. I take a few things which you touched on, yield maximizing. So it also tells us that diversification, if well done, can help to maximize, returns on your portfolio as a whole. And then allocation strategy is also very important. How much are you allocating to what asset class? What are you allocating, in terms of the quantity, the percentage? So this is a very, very good viewpoint that you've given to us. So the last but not the least, I would want my speaker, Ifeoluwa Dixon, to give me her viewpoint on diversification and how it relates or its relevance to us as investors. Thank you, Ife.
Thank you, Isabel, and good evening again, everyone. So like the three speakers have mentioned, the diversification is about spreading your asset classes, which in a way it's about spreading your risk. So in my own terms, I would say it's really about risk management. And it's based on the belief that holding different types of investments should yield potentially higher returns. And in a way, it poses a lower risk than any one investment within the portfolio. Just like Mr. Jemide mentioned, right, that even if you're looking into a single asset class, you give example of a bond, right? You're still looking at currencies, you're looking at geographies as well. So that again is diversification. And I would then have to say that you still need to be sure that the securities you are holding in your portfolios do behave differently. And so that all the investments you own or you own do not move in the same direction. Meaning you shouldn't have same financial instruments that have positive correlation, that are positively correlated to each other. Because again, that means you've not well diversified your portfolio. So when you are selecting your instruments as well, you want to pick instruments that would react differently when there is during an economy, right? And so that again going to enhance your portfolio construction and returns.
Thank you so much, Ife. I'm learning as well today. I mean, we can never stop learning. Thank you to all the speakers. This is such an interesting insight. So this takes me to the next discussion point, and I will push this point to Mr. Ayuli. All through the different perspective I was hearing, there was always a touch on risk, risk, yes. So, Mr. Ayuli, please tell us, people often mistake and compare diversification to risk. Are these correlated? Are they different things entirely, or are they correlated? We would like to hear your perspective on this. Thank you.
Thank you, Sana. Well, I mean, there's always a relationship between diversification and risk, but they're different perspectives. Right. So typically when people talk about diversification, they talk about avoiding risk from the standpoint of just making sure that if you lose money here, you have a hedge because you've diversified. But then diversification by itself could be a risk in certain circumstances. So if you're a DIY investor, people like me, a lot of the time I decide what I buy. Well, it could be risky for you to delve into investments that you know absolutely nothing about just because you want to diversify. If you're also an investor that is risk averse in certain respects, then it could be risky to your health to be investing in certain categories of investment. I, for one, don't do a lot of equities because I really don't want to wake up in the morning and be praying that, the CEO of Uber should not talk to a taxi driver, in an unbefitting manner, or, Elon Musk shouldn't get angry and slap his worker, because little things like that can trigger, a drop in the share price, right? So, that's it. So that's just another perspective to risk and diversification.
Oh, thank you for that, Ayuli. You heard him. He said it. Not even diversifying in itself can also be a risk. And I mean, whether or not, risk is inherent in everything that we do and in, when we're taking investment decisions. So this will definitely bring me to the next question or the next topic, which will be about risk again. You said, Ayuli, already that, you described your person when you were talking about how you take risk. You don't want to do equities or certain asset classes because of the sort of risk associated with it. So this next question will go to Mr. Jude. Some people are bold risk takers. Some others are very conservative. I would think that is like an Ayuli. And what would you, or some are medium risk takers. So any advice
in the
on
middle,
sort of,
in the middle.
Oh, you're in the middle. Okay. So any advice on methods on how we can measure risk before we invest? So are there any kind of strategies that are used in measuring risk? How can we actually measure risk before we invest? Considering that some people are bold risk takers, some people are very conservative, and some people are in the middle. Thank you, Mr. Jude.
All right, thank you. I mean, risk in itself, not taking risk, like they say, is the biggest risk. So if you're making any form of investment, you're obviously taking a risk. But beyond that, I think the first principle is really your sort of return that you're looking to get by taking or making that investment. Your investment objective, as well as where you are as an individual in terms of your age and your circumstance, so to speak, which will mirror into your income profile. And so when you look at all of that, obviously for younger people, they still have a lot of time. And so they will be looking to invest in instruments that have the ability to turn around over a longer period of time. So those sort of people will be invested heavily, should be invested heavily in equities. And when you talk about equities, you'll be looking at growth stocks, not necessarily blue chips that have the ability to pay dividend, but more importantly, high growth stocks. We're looking at tech stocks today, and the people that are making those investments are getting massive returns in the long term. And so that is because of the age profile. But for someone who is obviously closer to retirement should not be taking the same level of risk as someone who is just starting. And they say if you lose your shirt while you're young, you have enough time to catch up, but you don't want to take that sort of risk when you're older. And so the parameters certainly will rely heavily on the investment objective, where you are in terms of your income stream, age-wise, and more importantly, the sort of return you're expecting to get from the activity that you're looking to invest in. Thank you.
Very well said, Mr. Jude. To my audience, you've heard him. He said it all. Things to consider when you're looking to invest, and how to measure your risk. You're looking at things like your life stage, which is your age, definitely. So if you're younger, you should be able to take more risk. If you're, older, you might definitely want to be taking less risk. Your income bracket as well. I mean, you don't also want to be putting all your hard-earned, funds into higher risk assets. Your investment objective, which means that each and every one of us should definitely sit down and pen down what our investment objectives are, because these are the things that will definitely help you to then determine your risk bracket and how you can, measure what your risk level is, or what you should ideally even be taking on as risk. So this will take me to my next question, and this will be going to all my 4 speakers and panelists. We're in unprecedented times with the current global economic disruptions, e.g. high inflation rates we're seeing in the Western world, increased interest rates by the Fed, the ongoing Ukraine and Russia war conflict, and the looming global recession. So in all of this, stories or things happening globally, how can an investor position their portfolio to absorb these economic shocks? So what should we be doing? What can we be doing? What opportunities can we even be harnessing, to sort of absorb our portfolios against all these economic shocks? So I'll start again with Mr. Jude, and I'll have other people speak after him. Thank you.
All right, thank you, Isabel. I mean, if you think about it, what is going on now? You've already itemized it. So the question is, as an investor, how do you navigate the terrain to be able to meet your overall investment objective? I think one of the easiest ways of doing that, which is really in line with this discussion we're having today, is to have a diversified portfolio, just giving what you see across the globe and all the implications of all these challenges. A well-diversified portfolio will certainly help to a large extent to address some of the shocks. For instance, a high inflation environment, which is not necessarily limited to Nigeria, it's a global phenomenon at this particular time, poses a huge risk to your return. And so you don't want to have assets that are underperforming the rate at which inflation is growing. So you want to hold stocks in your portfolio that have the ability to perform over a longer period of time. You also want to hold bonds like fixed income securities in your portfolio that will help you to smoothen out the high volatility of equities that you'll probably be seeing in some markets. If you look at our market is up over 20%. But you can see in the last 3 months, there has been some form of volatility as investors begin to look at all the rising rates that you see on the fixed income side. So a well-diversified portfolio at this point is sincerely the best approach. Don't hold to one asset class. The other thing to introduce is think about alternative investment products, especially products that are commodity-based, for instance. If you look at some products that we have with the NGX, some have returned about over 65% year to date because they're exposed to commodities. And so you don't want to hold just traditional assets, equities, fixed income, bonds, but you also want to hold other form of alternative investment classes. Real estate is one of the ways of doing it. You may think that you don't have a lot of cash to go into real estate, but you do have REITs and other digitalized sort of tokens that you can have. So thinking about having access to such investments will also help you navigate the terrain that we're seeing now in our environment, which is really very interesting. And we're having this conversation at this time to help investors just zero in on the best approach is to have a well-diversified portfolio at this point in time.
Thank you so very much. I'll take my next speaker, Kasie. Please help us shed some light on how an investor can position their portfolio to absorb these economic shocks, given all the things happening both globally and locally.
Thank you, Isabel. I think Jude has really given it a very good crack in terms of looking through your portfolio. So I'll just add that in times of global challenges, keeping your portfolio static is really a no-no. So it's very important for you to carry out a diagnostic review of your investment portfolio. And really what you're looking to do is to ascertain that you have the right mix. It might be time to reallocate, move from one asset class to the other. You need to continuously watch the markets and understand the market so you can identify the areas of shock and you're able to move into another asset class. So, ensuring that you're not concentrated in any one asset class is critical. So you look at moving out of maybe if equities is going through a bad time, you move into fixed income, alternatives, money markets, reallocate where necessary and in the right percentages as well. So, and of course, all of this must be done within your identified risk profile. So spread your investments in different instruments. Try and beat inflation by identifying all those high yield investments that are not negatively affected by inflation. As Jude said, move into alternatives that would really do well. So, critical, the main point is just to ensure that your portfolio is well positioned to continue to earn good returns while you're protecting yourself from any major losses.
Wow.
Thank you.
Thank you, Kasie. I mean, one major thing I heard there was not leaving your portfolio static and, how you have to continue to carry a diagnostic review of your investment portfolio. I would let Ife take her perspective and share some insights with us.
Thanks again. So on this, right, we need to bring it home and then we need to actually maybe speak to a larger audience. And, I'm referring to individuals, retail that may not have the financial muscle, to even go into some other geographies or buy Ghana or buy US bonds, or even commodities within or real estate, like Jude has mentioned. The beauty of diversification, again, is not just to institutional clients or HNIs, for retail as well. And I'll bring it on by saying, even mutual funds, again, are in a way diversified investments or basket portfolio. Because in a mutual fund, you have all sorts, when you're looking at some categorization, you're looking at the money market fund, it has all sorts of T-bills and also CPs, from highly rated corporates for CPs and also bank placements. In that way, again, like Ali mentioned earlier, even diversifying your tenor is, again, diversification. You're speaking about dollar fund, you're speaking about balanced fund, about bond fund, things like that. And I will give example because I did a bit of analysis again on these because I'm passionate about diversification, and when I meet with clients, I try to just let them understand the benefits of diversifying across asset classes or even mutual funds. And so for our typical FBN money market fund over the last 3 years, right, this particular fund has returned 25%, just if you're in money market fund. But with your 1 million, on the 25%, it may sound great. You're even still, you have a positive real returns when compared to inflation over 3 years. Again, that's averaged about 13% thereabout. If you look at the dollar fund alone, that has done 61%. Now, again, you can say, fantastic, over 3 years, fine. But if you then look into diversification, right, you have a slice of money market fund, you have a slice of our bond fund, you have a slice of the dollar fund, you have a slice of, the balanced fund or smart beta fund as well, outside of the money market that has done 25%, and you have a slice of all this, you could walk away with about 45 to 46% thereabouts, or close to 50, right? If I bring it in. And so I'm saying, even to the retail investors, right? If you have a slice of all these mutual funds in your portfolio, it's not everyone that can, we have to be honest with ourselves, that savvy, like Mr. Jemide, that will be checking what US has done today, what's, price of Telsa, what's going on in Tuba, with Apple. Not everyone. Even in commodity, in real estate, it's not everyone. I don't have that strength to be checking. And that's the beauty of, having an asset manager, that you can trust with your financial, that should grow it for you professionally. And I think this is another venue to just, let people know that no matter, as little as 5,000, you can invest in a mutual fund. That is well diversified as well. So you are covered. Your return is okay. And when you look at for risk takers as well, like we've mentioned earlier, diversification is a no-brainer, right? For the dollar fund I mentioned, for as low as $1,000 you are in, and you're covered when there is the downturn, like we are currently in our currency valuation. You are smiling to the bank when you convert it back to what you brought in before, and the fund as well is doing great. I think I would say, even diversifying locally, you can do that and can achieve that with mutual funds.
Thank you so much, Ife. Again, that was quite insightful. And I like the fact that you've been able to tell us that whether corporates, high net worth clients, retail clients, everybody should have a slice of everything. And which is also tied into what Jude said and Kasie said, a very well diversified portfolio. And I mean, retail investors, HNI investors, corporate investors can achieve that through using mutual funds. I mean, there are many types of mutual funds. And I mean, FBNQuest is also well positioned, to help investors diversify. So I would let Ayuli close this conversation if he has any, tidbits he wants to add to this conversation. So Mr. Ayuli, you have the floor again.
Thanks, Isabel. I mean, I think that Jude, Kasie, and Ife have done quite a good job. Let me just take you away a bit. When there's a war, some stocks will do better. If I had money, I would be looking for those stocks. Remember COVID-19, which stocks were doing good? Zoom, tech companies, right? If we knew then what we know now, as soon as COVID started, we would have found a way to buy dollars and invest in Zoom or some of these companies. We would have made a lot of money. So there are companies that are benefiting from the war. Boeing is one of those. They are supplying all kinds of things. Lockheed Smith, companies in biotech and defense will be doing very well now. So if you have capacity to invest, in dollar equities, it's a good time to pick out some of those companies. Companies that are into F&B and consumables. During the war, there are certain consumables that, people just have to buy, right? So I'll be looking at that. Another thing to note, if you've traced what's going on right now, for the first time in 20 years, the euro has risen to be at par with the dollar. That hasn't happened in 20 years, right? So what does that tell me? I may be slowing down in euro investments from a return standpoint. Then again, from an investment standpoint, there could be opportunistic buys denominated in euro. For example, if you decide that you want to go to Spain or Portugal or anywhere in Europe to buy real estate, this may be a time to begin to look and make sure that you trace what has happened over the last 5 years, so you know whether that buy is really opportunistic, whether prices have really dropped. And so you are buying to hold and see what happens. One other thing I would say is there's a gas supply issue right now in the whole of Europe because Russia is shutting down its gas pipes and all that, but it's still going to buy gas. So I should be asking myself, who's going to be supplying that gas? I should be doing all those kind of research. Good analysts should be researching out who is going to be replacing Russia to supply gas to most of these European countries. And once you can find that company, that would be a good company to invest if they are traded anywhere. The last thing I would say before I yield the floor is, for some people who can't do all this, don't want to do all this, in a time of conflict, we also need to realize that capital preservation sometimes and many times is more important than capital appreciation. So sometimes it's just time you hold your money. And really, if you were holding your money, if you had a US dollar, account, even if it's not invested, and you're just holding it, it may be appreciated, even though you haven't plugged it into something, because you probably just want to sit down and watch and see how it plays out. Let me yield the floor, Isabel.
Okay, thank you, Ayuli, for those nuggets. You all can hear him. He has also put some icing on the cake. He's talked about investing in different currencies. He's also talked about, sometimes just hold cash and, wait out for opportunities. There are always going to be asset classes that would do better even in a time of chaos. So just again, this says that, we need to look out, do diagnostic review of our portfolio, look around for opportunities, look at asset classes that thrive even when, economies are down. And, as some of the speakers have said, where you don't have the financial muscle to go directly into the market, you can use mutual funds to access this sort of investment options. Just to remind you all that we have a question and answer session after this chat, and I would like that we start to drop our questions into the chat box so that we can take your questions as early as possible. This would lead me to my next question, which will be going to my speaker, Ifeoluwa. So again, we've touched on some of the things already, but just looking at these economic indicators, right, both locally, what are the available opportunities for investors to diversify? Thank you, Ife.
Thank you. Same time, I think I've mentioned it even while speaking earlier to say, based on, and just like what Mr. Jemide also has mentioned, economic indicators, some, and I mentioned as well, we don't still select instruments that are positively correlated. So he has mentioned certain stocks, right, that you can as well buy, and you'll be smiling. Certain moves you would have made, you'll be smiling to the bank, even when things are going gaga at the moment. But again, not everyone has a financial muscle. I'll keep saying it to do what he's saying. We have some people that can go directly into all the ones that he has mentioned, but for our Tiwantiwa, our local people in here, right? And the retail people that only do, $5,000, $50,000, $100,000, $200,000, $1,000, $10,000, I would still say mutual fund is the way to go. With that, you've moved your worries and concern to a manager, a fund manager, who again will not be sleeping to ensure that returns are competitive enough, right? And so in that way, your risk is watching, the manager is watching, because he's a professional, that's what he's been trained to do. And so he's watching that, he's taking the right position for you, he's looking into different markets on your behalf, and he's pulling the funds together to go and invest. And the beauty is, whatever the total basket of that investment is yielding is what you, a 5,000 naira, would get, is what a 5 million naira person will get, is what a 5 million naira person will get in the same basket, in the same mutual fund. And so it's a win-win for everyone, right? Because you are not bothered about, there is Russia today, is Ukraine tomorrow, no, dollar is this, because someone is taking that burden off your neck and is watching your investment on your behalf to deliver something. And so, I would still say mutual fund is a way to go, is well diversified. And again, I've mentioned, even if it's just one bond fund, if you have bond fund on its own is diversified, right? If you then look at dollar funds again, and you have a slice of dollar fund and the bond fund, which is local, the devaluation will make your return again to be greater, and then the local aspect as well together. If you combine that again, your return will be greater if you are just stayed in a bond fund or even in a dollar fund as well. And so mutual fund is what I would advocate for even institutional investors as well to latch on to. And so for based on the economic indicators I've mentioned, even if you look at what equity has done over this year, for argument's sake, 17%. And then, like I've mentioned, if you adjust in the equity, that's what you get. But if you have a mutual fund across, we have mutual funds that returned more than that. But that's a couple of 3 mutual funds coming together to give you that return. And so I will still advocate mutual funds for safety, for your peace of mind. So you are not watching what's going on today, what's going on tomorrow. Someone has taken that burden off you. And so that's what I would say.
Thank you so much, Ife. And without taking so much more of our time, I would like us to take a second poll at this point. So I would have the question on the screen, and then I would like you all to participate in this poll. So the question is, what would be your reaction if your local currency starts to lose value? Would you panic and move all your investments to an investment capital preserving asset? Are you going to stay calm and seek advice from a professional, or would you just do nothing, and just hope for the best? So please take your answer, and I'll count 1 to 5, and then we'll be going off. So in 1, 2, 3, 4, and 5. Yeah. Wow. Okay. Interesting poll this is. There's no right or wrong answer, I guess. So we have 83% of us say we're going to stay calm, likely seek advice from a professional. I have 13% of us say we're going to be in panic mode, move all my investments to an investment capital protecting asset. And the least of us, which is 5%, actually said they'll just do nothing and hope for the best. I pray that after the session today, this 5% will actually become 0%, who will just do nothing and hope for the best. So this will take us to a few more questions for our discussions for our fireside chat, and we'll be ending the chat. I'm hoping that you guys are, gaining a lot. You're learning. You're taking cues on how to be more strategic about your portfolio, about investing, even in spite of everything that is going on. Again, like I said, please leave your question and answers in the chat room. We're going to be taking them after the session. So off of what we just discussed and the question we just asked, I know this is bugging this is a bugging conversation on a lot of people's minds. And I would like all the panelists to briefly touch on this. You know, the Naira is losing value daily, monthly, every day, right? Nigeria has a high debt rate. It's a pre-election year next year. So there's a lot of political instabilities. How can you advise us to position ourselves better as investors? What are the successful investment strategies that we can use in maximizing our maximizing returns and protecting the assets that we even have made already, and how we can even make more? So again, this is just bringing it down home to Nigeria. We've talked about the things happening globally. Now, this is bringing it down home to Nigeria. Naira is losing value. Inflation rate is high double digits at 19.2. Our debt rate as a country is really, really high. It's a pre-election year. Election is going to be in February next year. There's a lot of unrest and instabilities. So how do you advise us to position ourselves? And what sort of strategies can we use, you know, to protect our investment, to also maximize return on our investment? So I'll like to start with Ife. Yes, I would like to start with Ife. Thank you, Ife.
Thanks. Question is, seeing that Naira is losing value, right? And so what are our strategies? And based on high inflation. Okay, so concern over the depreciating state of the Naira will continue to remain a major one until we see direct reforms targeted towards improving inflows into the foreign reserve. Also, uncertainties around our political environment would also cause concern over our continuity in policy direction. The rising debt profile with the increased currency debt to GDP, I think as at Q1 2022 should be about 23%, and with our poor revenue generation. So I've mentioned certain things, right? Outlook really is not great for us as a country. Naira being depreciated, or devaluation is taking its course, as we want to call it, and also our risk profile, our debt to GDP is not great. And over time, with the FX issue that we have, we've seen that foreign portfolio investors, they've reduced their exposure to Nigerian market, or not even coming again. Only those that are, maybe I would say the word stock, that are still with us. And so with the current investment climate and the current interest environment on risk-free assets, again, a diversified investment portfolio will enable investors to maximize their returns. Like I said, so an exposure to a dollar-denominated investment will give investors that currency edge on their investments, while Naira instruments can be tilted towards a low to medium risk mutual fund. And so that's the strategy I would, advise people or give to people to follow. Have a slice of a dollar. You can't go wrong with dollar at the moment with the way things are going. And so if you have a dollar denominated investment plus a Naira instrument in your portfolio that is tilted towards low to medium, again, that would be great for you to have this particular time that we are in.
Okay, thank you, Ife. USD is the way to go, or some exposure in USD is the way to go. Kasie, would you share your perspective on this, and what do you advise that investors can do? What investment strategies can investors adopt to protect and to maximize returns, considering what is going on right now? Like I said, Naira losing value, pre-election year, and high debt rate of Nigeria, and all of these things. So what investment strategies can investors adopt?
All right, thank you, Isabel. So aside currency diversification, reallocating your local currency to foreign currency dominated denominated investments. I think you could also diversify across countries, so across borders by beyond even converting to USD instruments, you can go across borders by investing in non-Nigerian USD denominated instruments. And again, this has been kind of made easy for you if you don't really understand the markets or which country to go into. We've recently launched a specialized dollar fund that is specifically designed to diversify across currencies and also borders with some exposure to non-Nigerian USD assets. So that would be a good place to start, you know, even beyond just investing in the dollar fund. You can actually look at the specialized dollar fund because that has diversified across borders. In addition, it's really important for you to also consider timing when you're going into the markets. You know, you need to be able to gauge the market correctly. So if you're looking to shift into any asset class, you would need to engage a specialist, an advisor really, that will tell you, okay, position you properly and say, this is when to move, or this is when to wait. Even for the assets you already have, when to sell or when to hold, you would need the advice from an investment advisor. Again, this is a service that, you know, we offer. We have experts that would really sit down, look at your position and advise the right strategy to adopt, particularly in these times of, you know, global challenges.
Okay. Thank you so much, Kasie. Diversifying across borders, that stuck in my head. You know, geographical diversification. If you are touched on currency diversification and you're touching on diversifying across different geographies. Mr. Jude, would you have something to add to this conversation?
All right, thank you. So when you think about it, apart from what has been said already, in the environment, what are your options, or where are the opportunities? I think there's still opportunity really in the real estate market. If you think about how that market itself gets the raw materials that they utilize, which are usually imported. So there's that element of imported inflation. So the last thing you want to do is to hold on to cash. There were comments initially around perhaps holding on to foreign currency could be a good strategy while you wait out opportunities. But I think that the opportunity lies within the assets that we have in our local market. So real estate, and for those that don't have the financial capability to go into markets, you can always buy the democratized one by investing in REITs, real estate investment trust, or like Ife had pointed out, all the various elements of the mutual funds. But it's important to also state that the dollar fund in itself depends on your risk or your appetite for risk, because that is also subject to volatility because of the composition of some of the things that are investing in. So if you're not heavily into risk, you could do the Eurobond fund. That has a lower risk, but also has the ability to help you diversify your currency risk at this particular time. Thank you.
Okay. Thank you so very much. Asset class diversification again is, you know, another strategy you've touched on. And so I would leave the floor for Mr. Ayuli to close this point if he has, again, any nuggets to give us. Again, the question is more around strategies that investors can use to protect their assets during times like this, especially when the Naira is losing a lot of value. And Mr. Jude has talked about alternative assets, which he talked about real estate. Ife had talked about currency diversification, and Kasie had touched on diversifying across borders, which is geographical, regional diversification. So, yeah, thank you.
Thank you so much. Isabel, let me use this opportunity to say that immediately after we finish the question, I may not be here for the Q&A, I have to dash.
Okay.
Yes.
Thank you.
I think one thing I would say clearly when we talk about inflation at this point in time, it's at 19%. I don't know any investment that gives you 19%. You can't catch up you can only mitigate by finding investments that come as close to inflation as possible. And right now, off the top of my head, Naira denominated, I think the best thing you can get will be the FGN bonds or T-bills, hovering between 12 to 13%. The last time I checked, may have gone up. I don't check every day. But I think that's probably one of the things. The other thing I would say, since we're talking about the pre-election year, is that this is not a point to invest in any business that is likely to have a policy somersault. Public-private partner companies that are into public-private partner companies that are highly regulated in such a way that there could be policy somersaults if government changes. I'll keep my eyes on that kind of investment, and I'll be bearish about those kind of investments rather than bullish. I would also like to say that historically, the US dollar always goes up against the Naira just before an election because politicians mop up. That's the reality. Then, historically, as soon as the election is over, that same money that they mopped up, floods the market again. So, the Naira strengthens against the dollar. So for those of us who are, dollar merchants, who are buying and hoping that it goes up, just bear this in mind in terms of your timing, when to buy, when to sell, and what to do. I'll stop there at this point.
Okay. So the point to take here is don't be speculative currency. Don't be speculative. If you're buying foreign currency, make sure that you're investing it. Also to take note are some of the securities that you can buy to hedge these market shocks. I have a question for Kasie. So your forte is on the institutional side of things. So looking at corporates, institutions, SMEs, small, medium enterprises, and micro SMEs, right? They have their primary operations, right, which is not investing. Is this discussion relevant to them, diversification? And if it is, how can they approach diversification? Most of the things we've talked about, we've targeted more of, we've tied it more into individual portfolios and people's investments. So from the corporate viewpoint and from institutional viewpoint, is diversification important to them, and how can they approach it? Would like you to take this in just 2 minutes. Thank you.
Thanks, Isabel. So, yes, diversification is always relevant, whether in business or investment. So the same way in your business, you would diversify across maybe your product range by creating new products for customers, to ensure sustained business and market growth. It's also necessary to diversify your revenue streams in order to create multiple streams of revenue and reduce your dependency on, maybe your core line of business. So investing outside your business would definitely support the longevity of the business, and it would increase your profitability. It would also protect you in terms of shocks from within any conditions that arise in that sector. So diversification in this instance would give you like a hedge against shocks that are inherent in your particular sector. So now we would typically advise corporates that, it's well worth investing a portion of your profits as in creating a section that you can invest. And one of the value add-on services we offer is to carry out a diagnostic review of your business taking into consideration all the peculiarities like your business cycle, sit with you to understand your goals, your risk profile, liquidity needs, and even your investment horizon. So we can now advise as to the best way for you to invest. If you would create a segregated portfolio, or if to invest in just specific products. And as Ife mentioned, corporates also invest in mutual funds. So you can also have mutual funds as your to manage liquidity. So basically, this will ensure that at all times your business is primed to really maximize returns, be it in cash management products. And this would also enable you meet liquidity needs as they arise. So in this case, diversification again is very relevant to ensure profitability and longevity of any business.
Wow. Thank you for that, Kasie. We've heard from the speaker. Diversification is also relevant for corporates, institutions, even for entrepreneurs that own businesses, whether small or micro SMEs. It would definitely help to support longevity and profitability, help you to create liquidity, both in the short term, medium term, and in the long term, and also help you to manage shocks that also will affect, economic shocks that can affect your business. So as an institution, you're not secluded from investing and being well diversified as well. I would like Mr. Jude to take this question, which will be bringing us almost to the close of the chat, of the fireside chat. For people who are about to be retired or who are retired already, right? How would you advise that their investment portfolio should look like? I mean, what assets should they be buying? Which should they be selling down? What is the goal at this point? So I'm retired, I'm approaching retirement. At some point, we're all going to retire anyway. So it will be good to know what our portfolios should look like towards this time. And thank you, Mr. Jude.
All right, thanks. So, excuse me, for that category of individuals, it's pretty straightforward. So you need regular income, right? So you want to invest in instruments that you can control to a large degree the outcome, because your risk profile at this particular point is a bit narrow. So you want to invest largely in fixed income securities. The bulk of your portfolio should actually be in that. And since we're talking about diversification, there are different durations, there are different yields. So you may want to invest in a bond fund. A large portion of your portfolio should be in a bond fund, as well as the money market fund. It's the money market fund, because of the nature of how it's structured, allows you to get regular income from the dividend that they will be paying out to the shareholders, so to speak. But for money market fund, they'll be paying their regular interest to bondholders, so they will be getting regular income from that. The other thing to also bear in mind is if you're holding on to growth stocks, this may be a good time to cash in on those growth stocks and reduce your exposure there, while you then want to hold. If you do decide to hold some form of equity, it will be equities that have the ability to pay dividend regularly, like the blue chips, for instance. We have Nestle and the likes. Typically in Nigeria, we have seen some of the banks as a very good holding for this purpose, because they do pay interim dividend and they pay final dividend. So that allows you to manage your cash flow by holding on to this sort of investment. But now that we're talking about investment, it's also good to point out that increasingly the switch to sustainable sort of investment has to be mentioned as well. You have to be looking at companies that have good corporate governance, especially around the ESG, how they manage the environment and how they manage all the risk associated with the social and the stakeholders in the environment where they operate in. It's very key to be mindful of that, so that your investment will have a sustainable outcome in the long run. Thank you.
Thank you so much. I would honestly love to continue this chat. Learning a lot from, you speakers, from all four speakers. I'm sure my audience is also, they're enjoying the session. I can see a lot of questions dropping in the chat room. But just because of time, we would have to end the session and the chat at this point. I would honestly and really like to thank the speakers. I am sure my audience are also very excited about the discussions we've had today. So Mr. Jude, thank you so much for being here. Kasie, thank you. Ayuli, thank you. And Ifeoluwa, thank you so much. Notably, many things have been said, but we do take the point that, look, you need to diversify your portfolio. This will definitely help you to manage all the sorts of risk. Even not diversifying at all is a risk in itself. So we shouldn't be scared of diversification. There are steps and techniques, in which you can measure what your risk level is. We talked about age, income bracket, having an investment objective. We also talked about allocation, how to allocate. So you have 10 million naira. You have to be able to say, okay, I want 30% of this to go into stocks. I want 30% to go into USD investments. So allocating as well. Then we talked about doing constant diagnostic reviews, not having a static portfolio. Then also looking at alternative asset classes like real estate, even business interest, and other assets. Then equities as well. We talked about stocks that are defensive to economic shocks, and more notably, one of the speakers had also mentioned, for investors who don't have the financial muscle to go directly into the market, you might want to be looking at how you go in, using the mutual fund. There are many mutual funds. Even FBNQuest Asset Management has about 7 mutual funds, which can help you diversify. Also corporates, very important. Corporates also need to, have investment and be well diversified. There's so much, that the speakers have touched on, and this has been a very, very interesting time. At this point, I will be taking questions from the audience. We won't be able to take so many questions, but just a few. But I'll encourage that you can leave your questions. You can send your questions to our email, webinars@fbnquest.com, and we will try to answer whatever bugging questions you have from there. We're also going to be sharing this recording on our YouTube page. For all the people that have attended the session today, you'll get a link with the email for the video recording. Mr. Ayuli has taken permission to be out of this question and answer session. So I will just have 3 panelists left, and we will quickly run through a few of the questions that we have. Some of the questions are intertwined, so we'll just take questions that are intertwined together. So I'll take this to Ife. What is the historical performance of the FBN Halal Fund, and what is required to invest in the dollar fund? So what is the historical return of the FBN Halal Fund, and what is the requirement to invest in an FBN dollar fund?
Thank you. So Halal Fund opened in 2020, May, with a price of 100. Currently, we're at about 125, 123, 125, and so that's like a 23-25% in terms of price appreciation, without adding the distribution we did in 2021. We're about to hit. So by and large, it should be between the 23 to 25 I've mentioned anyways, in terms of total returns that the fund has done, which again is higher than inflation within the same period, that on the average is being 15%, 15 to 16% thereabout. So again, investing in this mutual fund, we have invested in Allah in the last 3 years, 2022, and compared to inflation figure as well, you are still smiling to the bank. Inflation hasn't eroded everything from your post. The other question is?
What is required to invest in the dollar fund? Yeah.
Dollar fund. The sake of time, I think everything is on our website. So I would say we should go onto our website, to get the requirements, but is well detailed on the website, including the form that you need to fill. And I believe customer care unit will take it from there, right, Isabel?
Yes. Okay. So for the sake of time, there are many of the questions that are, like Ife said, on our website. So questions around our mutual funds. Minimum investment amount for our dollar fund is $1,000. We just launched a new fund, the FBN Specialized Fund, which is $10,000 because it's for certain qualified investors and institutions as well. Other features of all our mutual funds are on our website, and we're going to share as much information as we can share with all the participants in this session. So I'll just try to take other questions that are not really related to, the Eurobond fund and how you can invest in the Eurobond fund. So we have a question here. I'll leave it to Jude. It says, please elaborate on all the asset classes on the Nigerian Stock Exchange to explore in achieving a diversified portfolio. So it says, elaborate on all the asset classes available on the Nigerian Stock Exchange to explore in achieving a diversified portfolio. So the asset classes available on the stock exchange.
Right, thanks. So we do have the traditional asset classes, equities, fixed income, as well as the ETFs or exchange traded products that will include the ETFs as well as the REITs, the real estate investment trust. But more recently, we just also added derivatives. Now you're talking about risk management and diversification. Derivatives is one of the ways to also help manage risk and improve the performance of your portfolio. We just recently listed the NGX 30 index futures, and that gives you the ability to diversify and manage your holdings in the NGX 30 index, as well as the NGX pension index futures that we just launched. So if you're holding on to that index as your portfolio, you can then have the ability to de-risk that portfolio by investing in derivatives or the futures of this. By just having a view, you'll be able to de-risk your portfolio and get all the benefits associated with a well-diversified portfolio. But it's also important to note that at the NGX, we're really committed to creating asset classes that will help mitigate all kinds of shocks within the system. Really heavy on technology. We'll be holding a webinar on the 6th on our technology board, which will give access to companies to be able to list. We do believe that democratizing that set of companies, or those set of companies, will help retail investors gain access to the growing tech companies as well. Thank you.
Okay, thank you for that, Mr. Jude. We have a question here that says, I'm a self-employed person and I have 2 million naira invested in the FBN Money Market Fund. Would you advise that I liquidate and move to the dollar fund to hedge against loss? Yeah, so I'll allow Kasie to take that, if you don't mind, please. So I'm a self-employed person. I have 2 million invested in the FBN Money Market Fund. Would you advise that I liquidate and move to the dollar fund to hedge against losses?
All right, thanks, Isabel. That's a very good question. So, whilst it's always is also good to have a portion of your investments in dollar-denominated instruments, investments are not really taken in isolation. So, before you would begin to make any decision, you need to sit down and understand your profile in terms of what is your goal as to the investments, what's the objective, and, even in terms of properly dimensioning your profile, you need to understand what's the purpose of the investment is before you take a decision. So yes, on the surface, it's advisable, to hold a portion of your investments in dollars, but this has to be done within the right context in terms of your investment profile.
Okay, thank you for that, Kasie. And I hope that answers the question for the person who asked the question. Ife, I would let you answer this question. What is the difference between the FBN dollar fund and the specialized dollar fund? In 2 minutes, please. Thank you.
2 minutes is a lot because of time.
In 1 minute.
So just to be quick about it, right? For the dollar fund is 100% Nigeria, the underlying assets. For the FBN dollar fund, 100% underlying Nigeria exposure, 100%. And it's also for retail, and that's why it's as low as $1,000. Right? Now, for the FBN specialized dollar fund, one, it's for qualified investor, and according to SEC rule, qualified investor, people that owns like 100 million net worth. Now, not cash, but net worth. So if I look at your assets, your portfolio, your land, anything and it's up to 100 million, you're fine with it. And the second differentiating factor is these other, like Kasie has mentioned, has exposure to outside of Nigeria. The dollar fund, 100% Nigeria for sovereign, corporate, whatever, CPs in dollars, placement in dollars has to be in Nigeria. For the other one, you can't gain exposure to outside of Nigeria. So you can do US Treasury, you can do Egypt, you can do, any other countries that you feel like doing with Nigeria as well. So a certain portion still needs to be in Nigeria. So those are the two differentiating factors between the FBN dollar fund and FBN specialized dollar fund.
All right, thank you for that, Ife. And we're going to have to stop taking questions at this point. For all the other questions that we have in the chat room, we will try and ensure that we answer these questions, and we might circulate them in an email to all the attendees of the event. Like I said already, we're going to have this video recording up on our YouTube channel, and we're also going to send it via email to all the attendees. And for other questions that you intend to ask, you can send your questions to webinars@fbnquest.com. So webinars being WEBINARS with the S, webinars@fbnquest.com. I would like again and once again to thank everyone for joining us on this edition of Leading Conversations with FBNQuest, which focused on exploring the relevance of diversification. I hope and believe that you all found this very informative, and we look forward to engaging you further to take advantages of the opportunities which some of our speakers have mentioned. And you can follow us on our LinkedIn page. You can follow us on our Twitter page. You can follow us on Facebook and Instagram at FBNQuest, so that you don't miss out on other upcoming webinars we'll be having from time to time. If you need any support, if you need to speak to an investment advisor, if you need to speak to a fund manager, we're happy to guide you. Please send an email to webinars@fbnquest.com. We would not want to call it an evening, but we would have to call it an evening. And thank you once again to my speakers, Ife, Mr. Jude, and Kasie. Thank you all, and God bless. Have a great evening.
Thank you.
Thank you.
Thank
so
you,
much.
Isabel. Thank you, everyone.
Better for you. But she's not alone. Mo is part of a system, an ecosystem, working together to make sure everything runs smoothly. There is Mo in Human Resources, who just hired Mo the intern. She is excited about new possibilities. Mo in Finance and Legal and Risk Management. Mo in Customer Services and General Services and Trade Services. Mo in FBNQuest Trustees helps Mo, one of her favorite customers, secure her legacy in a trust that will live long beyond her years. Mo from Wealth Management helps Mo decide the right investments to grow her fortune. Mo discusses with her personal financial advisor from FBNQuest Asset Management, who uses real insights to provide solutions that are exactly right for you. And from Mo, who has just invented an app that will change the future. Mo from the investment banking team is helping her raise financing so she can scale across Africa. So who is Mo? Mo is you. Mo is us. All of us with hopes and dreams, which is why our solutions are shaped by your goals. Mo is FBNQuest, and we are powered by people.